Hey everybody, Boris from Speaking Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for Sep 3 to Sep 7, 2018. And the story in the COM dollar land has been a slow but definitely steady slide to the downside on the risk side, with CAD, of course, its very much own drama story on the NAFTA side. We'll get to that in just one second. But the big story at the end of the week was the slide in Aussie dollar on, I think, aggravated fears of much worse than expected U.S.-China trade war developments. The news that U.S. is planning to drop another $200 billion worth of tariffs against China is really aggravating the whole Australian situation after we had the drama of politics last week and the drama of highway last week as well. So Aussie actually looking much worse this week than it did last week. We took out a pretty serious support level at 72, and it looks very much like it could be on its way towards 70, especially if the RBA this week sounds more dovish than normal. Let's take a look at the levels first. We'll get to the calendar in just 1 second. So the levels drop down. Aussie now drops to 73.71 on the range level. Caddy kind of, as I said, it's very much its own story. You really can't trust these levels. These are just sort of breakout levels, given what happens on Wednesday as far as the NAFTA negotiations go. Kiwi has been relative strength in a sense that it's holding above the prior lows set post the RBNZ shocker of where they basically suggested they might cut rather than raise going forward. So looking at the calendar this week on the COM dollar front, not that much data, but we do have, we have the RBA, of course, obviously coming up. We have retail sales on Monday, then we have the RBA coming up on Tuesday with a cash target. That's going to be an interesting takeaway for the market. Nobody expects any kind of movement on the rate front, but it'll just sort of be the key language that the market will be watching for is where the risks, if they say risks are balanced, that's actually a bullish statement. If they say risks provide a situation where there is a possibility to the downside as well as to the upside, that type of a statement is going to be viewed as dovish for the Aussie because it suggests that the RBA may not be predisposed to actually loosening monetary policy, then strengthening it as we go forward. And then end of the week, we have on the COM dollar front the Canadian data, the Canadian employment data, but this will happen, that will happen along with the US data on Friday, but this will happen post two big events midweek, which is the Bank of Canada rate decision on Wednesday and the NAFTA negotiations, which is going to be just a massive, massive focus on Canada. Obviously, Bank of Canada is not going to do anything until it gets visibility or direction from the NAFTA negotiation. But it'll be interesting to see what their language will be outside, assuming that, let's say, NAFTA gets done. Will that make what I call Bank of Canada Fed light, meaning that it's going to follow the Fed perhaps on a once every 6 month rate hike cycle instead of once every 3 month rate hike cycle, because the North American complex is the only one that's really tightening in the world right now. And certainly Bank of Canada could follow the US, assuming we come to terms on some sort of a trade deal coming in here. So it'll be very interesting to see. There's just a tremendous amount of headline developments that could absolutely wreak havoc with the charts. Let's take a look at the charts here, though. The one thing I think that's kind of clear on the charts is this. I mean, look at this. That is just a very ugly, ugly candle. As a matter of fact, I have to go to the weeklies to show you where this candle really finds. Look at this. Look, I can't even look where I have to go. We have to go to 2016 to find the lows that are matching this weekly. We are, and actually all the way out to almost the beginning of 2016. Beyond that, what was shocking to me is that support doesn't even come in at 70. Support really comes in at around 68. So if you're looking for a momentum trade here, I mean, what's ugly about this particular candle is it's not only just sort of lows at a day, but it's lows at a week, lows at a year, lows at a multi-year. That's significant. That's very significant. When I have price action that's hitting multi-time frame lows, multi-time frame highs, you really want to pay attention to that. So I think if you're looking for a momentum trade to the downside, I mean, just purely momentum trade, this one seems to be the strongest one from a pure technical point of view. If we go back to the dailies, we can see that the break here below the 72s now basically creates sort of like a 72.50 stop on the position, right above that. You get above that, maybe we found a modicum of a bottom. But any move to the downside opens a run towards 71s with just pure liquidation, as a lot of the stops I think are going to be trapped behind this level and force a move to the downside. The trigger here could be the RBA. If they are negative, it could really put further downward pressure on the currency. And the RBA, given the fact that you have all this tension with China, I think it's going to be very doubtful they're going to be just laissez-faire and nonchalant about policy. I think when you look at, if we want to take a look at the Australian data just for 1 second, let me see, I think I pulled it up here. Yeah, if you look at the Australian data, and this is the August data, it's mixed. Better retail sales, the consumer is better, but what starts to kind of deteriorate at the end of the month, you see the employment data is a little bit wonky, but what starts to deteriorate at the end of the month is the private capital expenditures, the housing market. Those things, if they start focusing on the fact that the corporates are not investing and that the housing market is certainly peaking, and the housing market clearly is, I think, peaking in Australia, that could create a much more dovish RBA statement, which could push us to the downside. I like this trade start of the week. I mean, the risk here is pretty cleanly defined at around 72.50, and if we get any further downside price action, certainly 71.50 is in view, but possibly all the way down to 71 as the trade develops. Now, Caddy, actually, you know what? Let's take a look at the Kiwi, because they're sort of in tandem. So Kiwi also coming down. It's kind of like trading as a little cousin of Aussie at this point. It's just mirroring the moves, but not quite to the lows. And that's the thing. I think Kiwi is a relative strength trade simply because it's just holding these lows at the 65.50 level to the downside, and whatever drag that we see to the downside is going to be smaller than the drag that you see in Aussie, simply because it's just not much news going on here on the Kiwi side. Now, Caddy, of course, completely separate story here. So this is in many ways meaningless because it's all headline risk, right? Do we or don't we? Do we have a NAFTA deal or don't we have a NAFTA deal? If we don't have a NAFTA deal, it's not an existential threat to Canada, but it is going to be a very negative development. I think we certainly could squeeze our way out through 31s, possibly all the way out to 32s. 32 would be the right area to perhaps establish some dollar CAD shorts if you think that it's much ado about nothing, because ultimately they're still going to have to trade with each other. They just simply won't have the kind of a comprehensive trade agreement that we've had in place before. Very hard to say. I mean, the conventional wisdom, as I said, is that the market thinks Trump is going to have to cave in because he can't get the Mexican deal unless he gets the Canada deal. But you never know. I mean, this is a guy who bankrupted a casino, so he can destroy anything in his path given a choice. Very, very hard to say. That's why I think it's very tough to trade this unless you really feel strongly politically that it's going to get done. Very hard to trade this until you get the news. So we have the BOC, we have the trade negotiations on Wednesday. That's really going to be the key day of the week for dollar Canada. And until that point, we're basically looking at the 31.28 range, 32.28 ranges are the wide ranges against which you're going to find some resistance on the technical side. But where it goes from here, your guess is as good as mine until we get to that point. Wish you guys the best luck, the best trading. Boris Landsberg, over and out.